Good morning, everyone, and happy Thursday. The market's still, I don't want to say like tanking down, but it's not looking the best this morning. We're just more flat, but we still have some like negative momentum in the market. Some stocks like Apple are definitely trading lower though, which is very interesting to see. So the market's kind of holding up. Some stocks are tanking down like Apple, even Microsoft are taking a hit. So Tom, it looks like we're set for another pretty tough day. Well, what do you have on your radar?
Yeah, we definitely are. Like you said, Apple actually broke below this kind of pre-market low today here, right around market open. This is not a good sign heading into today. I know that the oil market is going a little bit crazy to the upside, but besides that, I'm not really seeing any stocks up today. I will say the SPY is just pretty much flat. It's just kind of sitting around the price it closed at yesterday. But I feel like once the market opens today, we're going to get a lot of volatility coming into the market. And I honestly can't wait to see what happens over the next like 15 minutes because yesterday's sell-off was so drastic. I would think it might spill over into today, but hopefully the market holds up.
Yeah, we'll see. And then Tom, can you do us a favor and pull up a chart of like Bitcoin and maybe even Ethereum really quickly? So I know that there was also some jobless data that came out, and that wasn't the best either. And like stocks are selling off, cryptocurrencies are selling off. Like there's just a lot of selling pressure, and I feel like it's interesting because it's not just the stock market right now. Like even Bitcoin is taking a hit, and I know a lot of people say that Bitcoin is, it should do good with inflation, which it should. It was just interesting to see it also sell off.
Yeah, it really is. And honestly, it like retested this $52,000 resistance after it fell below it like a few weeks ago. And now we're starting to actually get pretty close to this major support around 42,500. If we start to fall below that today, it's not going to be good. I could see us at least coming down to 40,000 or even breaking that and going slightly lower over the next couple of weeks. But yeah, the setup's just not looking good. And like you said, a lot of people were expecting Bitcoin up, gold up, and different things like that. And we're even seeing gold go down, believe it or not. So yeah, it's a crazy time in the market. It seems like lots of stocks are turning around, and I'm just hoping the SPY ends up in the green today. It looks like it is kind of forming a pretty good support at 468.
Yeah, I mean, there's a couple stocks that are kind of up today. I mean, the only stock that's up with like any sort of upwards momentum is Baba. And you got it right before I even said it, Tom. But yeah, Baba's doing decent. But besides that, like everything else is just eh.
Yeah, it's just not really doing anything. I know that the oil plays were doing, yeah, the oil's doing pretty good still. We have ZOM still popping up here today. They're looking pretty good. I know CVX is starting to look good. These oil plays are looking great on the daily charts. Like they are starting to really break out in some crazy ways. I'm not saying to buy them right now for the longer term or anything, but it could be good for some shorter term, plays if you guys are looking for some good upward momentum or something. I really hope Baba starts to break that high of yesterday, Mike. I was loving that movement yesterday and it came roaring right back down with the market. I'm really glad to see it gap back up though. And this is a stock that I would think would do pretty well, especially since it's more of a Chinese stock.
True, and actually it has a decent negative correlation to the market. So as of like the past, I want to say like 200 trading days, I believe, Baba has a correlation of negative 0.46 to the S&P 500. So, it's kind of good. If the market falls, then Baba should go up. So that's just one thing to keep in mind. But either way, it's looking decent so far. And, it is pretty big to see this type of upwards movement, 2 minutes into market open, especially like on a day where a lot of stocks are just trying to recover from just getting smacked yesterday.
Yeah, that is really good to see. I'm glad to see him up. And, there is a few stocks in the green today, but most of them, it's just not moving with any type of like really good momentum. Like you said, Baba is pretty much the leader today. I did see that Carnival Cruise Lines was starting to go back up again as well. This is actually a pretty good move out of Carnival today. It looks like it recovered up almost all the losses it lost yesterday. So that's good to see. And then I believe the banks are back in the green. Well, they were for a few seconds. Looks like they're turning back over now though.
Ugh, not good, Tom. So, I mean, the only thing that's like kind of moving up besides Baba right now, like I know you mentioned oil, but it looks like the cruise lines are doing okay.
Yeah, they are. CCL is looking pretty good. It's popping up. And They're getting pretty close to some resistances. I know that CCL was consolidating a lot around this like 21.80 to $22 resistance level up here. So as we start to retest this, it might get some up and down movement today. But I feel like that CCL has been really hot, Mike. Like CCL, AAL, a lot of the airlines, different these like reopening plays for some reason have done extremely well this week, and it's kind of blown my mind, especially with all like the variant news and everything like that going on. You would kind of think that these stocks would have taken a bit of a dip, but it's nice to see them up. I know Boeing was another one. It looks like it's turning around now, but it's still higher than where they closed yesterday.
True that. I mean, it looks like some of these growth plays are trying to pop back up. Like DraftKings is up 1%, which it's like, all right, it's good, but like you just had like an 8% down day yesterday. So it's like, I guess it's nice that it's up today, but we have a lot of room before it like actually starts looking like like a good momentum play. But yeah, I mean, at least it's good to see some of the stocks trying to pop back up, and BABA is just flying past its resistance from yesterday.
Yeah, it is. It just broke that. I just saw it pop from 3% all the way up to like 4.7% on my watch list. It was crazy to see it jump like that. And I cannot believe that BABA's breaking out like this, Mike. I know that Charlie Munger just doubled down on his BABA position down here, like at the very bottom. And I don't know if that gave investors confidence or what, but I will say, Mike, this BABA chart is setting up so well. Like if this ends up being the bottom, oh man, it's going to be a really good trade for anyone who caught this down here.
Yeah, I mean, it is looking good, and it is at a really good level. It's just, it has its own unique pros and cons, we'll say. But even if it does get like delisted, like that would be horrible. But from my understanding, it would likely just be listed like on the Hong Kong exchange. So that's interesting. But yeah, either way, it definitely has a lot of momentum. Second to BABA, I know we already covered like cruise lines and stuff, but it looks like Teladoc is looking decent today. It's up almost 2%.
Yeah, that's actually pretty good out of Teladoc. I'm glad to see them coming back. I wonder how Zoom's doing, and even Zoom's coming back. So I know that they're kind of in that, sector that did well during COVID. And I'm really glad to see both of these ones coming back. Teladoc on the daily broke below a huge support yesterday. I believe Zoom broke their support too. And I really hope that these levels end up holding, because like for real, like if Teladoc starts to fall below this major support around $89 to $90, it's not going to look good over the next like couple of weeks, I don't think.
Yeah, and what sucks for all of these growth stocks at this point is there's multiple things driving it down. So for example, like when if we were just looking at DraftKings, 'cause we talk about DraftKings all the time. When DraftKings was flying up and it was at like 64 or 65 back in September, it had a lot of momentum. It had good like social sentiment. People were fine with the earnings, but then, people started to fear rising rates, right? And all growth stocks started selling off. And now people are like, okay, short sellers are attacking, growth stocks, whether it's DraftKings, Zoom, Redfin, AI, whatever. And then now people who are holding shares of these growth stocks are selling off. So it's just like when it rains, it really pours, because now we have, fear of rising rates attacking growth stocks. Short sellers are partying right now with them. And then, unfortunately, people who are holding shares of these companies are just selling out, which is just adding more and more selling pressure to it. So eventually, when the tide turns, we'll see the short sellers cover their positions. Hopefully, the market eases out about rising rates. Hopefully, we see a rotation into the growth stocks, and then hopefully we see some more natural buyers come in. But it's been a rough couple months.
Yeah, really rough. And man, ever since we hit that upper resistance of $75, it's been pretty much like, or I should say 74.38. But in the end, it double topped up there. And ever since that, it just has not been able to get back. It's just been very unfortunate. Like you said, so many things are weighing down on this, from rates to just even people just selling out of their positions. So it's a crazy time, and it's been happening with everything, not just DraftKings. Like it's been happening with Zoom, Peloton, you name it. If it's a growth stock, it was probably going down for those few months, and just crazy to see. But like you said, Mike, the recovery back up is going to be crazy when it does happen. If those shorts do end up covering, and like let's say the short interest is pretty high, then I think it'll be a pretty good situation whenever they start taking profits. And hopefully it's pretty soon. It is the start of a new year, and I would think that some of these stocks would definitely start to go up eventually. I know that we've been saying this for a long time, Mike, but eventually these stocks are going to turn around. I will say though, the market never makes it easy, so always keep that in mind. It looks like it would have been too easy to just buy on these double bottoms down here.
You know it. It's so true. Alrighty, so then we have Sam saying Microsoft trying to head up. So let's take a look at good old Microsoft. So it's like basically flat on the day. It's up, or it's down 0.04%, but you're definitely right. It is trying to head up. It had a decent reversal right at open. Apple's doing the same thing, and it's slightly outperforming, but that is good to see because companies like Microsoft and Apple, when they're falling, they have a huge impact on the market overall, and when they're rising, it also just helps. It just helps like other stocks rise just overall.
Yeah, and the SPY almost looks exactly like Apple and Microsoft. Like at open, of course, they had a red candle on the 5-minute. Now we have two nice green candles coming in right after. That's the exact setup we're seeing on Apple and Microsoft. So it looks like that the market is kind of following along with those stocks. And, Mike, I know how everyone talks about FANG stocks and how Facebook is like the F in FANG. I saw some hilarious video yesterday where some analyst or somebody said, we need to change out the F and make it, instead of FANG, we need to call it TANG and replace Facebook with Tesla on there. Yeah, I saw that because, man, Facebook has been under some scrutiny lately. Like they have been going down quite a bit. I know they came out with that metaverse news, but man, ever since they came out with the news, we've been seeing companies like Unity and other companies like that, even Nvidia, like benefiting a little bit more even than Facebook has. Like, I'll be honest, Mike, like, I was really hoping they'd break up above some of these resistances, but they are starting to really, get hit. I know they're recovering back today a little bit, but this week has been bad for them.
Yeah, it's been really rough, and even some companies that were just exploding a couple months ago, like how about Rivian, Tom? Like just a couple weeks ago, actually, this thing was at 141. Now it's at 90. Like the low today was, what is that, 86? So it's just like crazy. Like the sell-off we've been seeing has just been really, really crazy. Rivian's been taking a beating. Like Unity, I believe, pulled back a good amount. Matterport, yeah. Like there's just like all of these stocks that were exploding like weeks ago are just getting smacked.
Yeah, and Unity is actually going to be, I think, a pretty good pickup at these prices. To be honest, like this company is very sought after. Like they're a huge software company and. Even though they're dipping right now, they're probably going to do pretty good for the longer term. And I'm really eyeing this one up, Mike. I know that like UPST, Affirm, and we've been seeing so many stocks going down, especially after they were running so drastically. And I think Unity is one of the better ones to look at. I think Unity, maybe like Twitter, Snapchat, some of those stocks down here at lows, I think will be pretty good. I know that Twitter and Snapchat aren't my favorites, but I think Unity is an awesome pickup down here.
Yeah, I mean, I've heard a lot of great things about it. To be honest, like I don't follow it super closely, but I have heard a lot of great things, and I think the chart kind of speaks for itself.
Yeah, and they're in that gaming industry, and they'll be working on a lot of new stuff in the future. So even if they do bad for like the next few months, I think they'll be pretty good in the longer term, especially whenever the metaverse starts to actually roll out. Me and Mike were actually talking about this, and like Facebook said that they're pretty much not even like looking at their platform to come out for like the next 3 to 5 years, I believe. So it's it's going to be a while before we start really seeing some of this stuff play out, I think.
Exactly. Alrighty, so yeah, I know we covered most of the stocks that were getting destroyed yesterday, but some stocks that are popping up right now is actually Facebook, Tom. We were just talking about them, but they're actually leading one of my scanners for a breakout.
Yeah, they're up like 1.87%. They're starting to really recover from yesterday, and they're popping back up in a major way. I wonder if people are going to start buying the dip on them because, man, their stock has been underperforming quite a bit, I'd say, compared to like Unity and just how some of these other stocks had those crazy moves whenever that announcement came out. But yeah, I mean, they're recovering up nicely. They're now up 2%. And as they go up today, there's going to be a major resistance, I think, right around 332. There's been a ton of bounces right there, and we're actually pretty close to it.
For sure. So I know that a lot of stocks are at least trying to pop back up today. One thing that scares me a little bit is if we look back almost 2 years ago, which is really weird to say, but 2 years ago with the COVID crash, there were actually a lot of green days sprinkled in like that crash, you can say. So let me just pull it up on my chart really quickly. So yeah, just like you have it, Tom, we can see like yes, it was one of the quickest drops in history. But if you look through it, like there were a decent amount of green days sprinkled in the mix. So it's like even though we're seeing like some green in the market so far, like like that's we're not free and clear just yet. Like it's if we could see like on that chart, like we saw a huge dip down on February 28th. And then we saw a giant green candle on March 2nd, and then even another one on March 4th. And then after that, like, we would just gap down horribly, and like it would try and run up. Gap down horribly, try and run up. So, I don't know, Tom. It's not looking good. And I know this was like a unique situation and all that, but hopefully the bloodbath stops sooner rather than later.
Yeah, and even if we go to the crash before coronavirus with like the China crash, you can see how the market was really up and down on its way down. So yeah, there's definitely lots of green days sprinkled in between these big moves. And honestly, like you said, Mike, today we are not free and clear yet. Like, man, we've honestly barely recovered up. Like, we're not even like halfway up to the move of yesterday. Like, once we get back up above maybe like 472 or 474, I could see the SPY starting to really maybe go back up. But until I see us go back up above some of these big resistance levels, I don't think I'm going to really be too bullish on the market. I know it's looking pretty decent though intraday. I like this 468 support, but I personally I'm just going to maybe either just play an individual stock or just wait till the SPY passes up above that resistance at 474.
I gotcha. Yeah, I mean, really the only thing with momentum right now is Alibaba, and I'm looking through some of the news, and it had a price target cut, but it was only from 245 down to 235, and the stock's at 127, so it's a pretty nice cut, I guess you can say. Like, even though they cut, like the price target's still at 235, so that's interesting. But besides that, it just really looks like investors are kind of jumping into these China stocks right now, or at least Baba. I mean, on a day where everything else is not really moving too much to the upside or the downside, Baba is like basically the only thing with like real momentum.
Yeah, it is. I mean, it's awesome to see Baba moving like this, and it kind of is like double bottoming here on the daily chart. Like we double bottomed right around this like 110 support. Definitely a good level to buy at down there, and it looks like it's holding up very, very well. I'm really glad to see that Charlie Munger came in, Mike. I think that was a really good piece of news for Baba. I think that they just had so many issues going on at the time, and whenever he came in, I think it gave investors a little bit of confidence to maybe start, to at least starting to average in and to at least get into at least a small position. So I like it. I think Baba looked pretty decent. I love that double bottom on the technical. I know that lots of stocks like Zoom, Teladoc, and different stuff like that have been breaking those double bottoms to the downside. But I really think that Baba might end up holding. It's a lot different than those growth stocks.
For sure. All right, we shall see. So, Tom, what setups are you seeing in the market right now? What are you eyeing for some short-term plays?
I was really looking at XPEV again. I know that this stock had been dipping down for the past few days, and I'll be honest, today it's starting to recover up pretty well, just like we're seeing with a lot of these growth stocks. And if I see XPEV pop up above $48, which is a pretty big resistance here, I could see them getting a pretty good move up towards $50, maybe $49. But I feel like this one is having a pretty good intraday move. It looks like Baba is starting to pull back very, very slightly here on the chart. So we'll have to see how this one ends up going over the next few minutes. But as far as plays to the upside, there's just not too much momentum today. Like we talked about, there is some stocks in the green, but once again, we have like MU having some good momentum. I'm definitely going to be eyeing them up. Peloton looks like they're in the green, Mike. This is actually nice to see, but they are starting to turn back over, and these setups are just a little lackluster today. I know that we're recovering, which is great, but we have so many levels that we're going to be running into, especially from yesterday with that drop. Like, it's going to be pretty hard to go back up, I think.
Yeah. How is the market overall looking?
This one's looking just a little flat. I will say it was looking pretty good from open. We had a nice bounce off that 468 support. almost straight up towards 470. I thought it looked pretty good, but we are starting to turn back over now. As long as this 468 support holds, though, I could see the market recovering up slightly today. And my main reasoning is just because the market's had two pretty drastic red days in a row, especially yesterday. I could see it possibly just going flat today, but I'm definitely looking for it to go down maybe like next week or something like that. But for today, I could see it maybe going flat just with how the stock market went yesterday. You know, like lots of stocks kind of like to recover or just go flat after those big drops.
Gotcha. Yeah, I mean, like you said, like there's just it's not like stocks are tanking today, but they're not running up either. Like it's just a lot of nothing. We can say that. Like most of the stocks on my watch list are, down anywhere from 1% to up, I guess you can say 1%. It's just like a lot of nothing so far, and that's bad for options traders because we really want that volatility so the options can move up. But when we see a day like this, options are just going to get shredded.
Yeah, they are. It's going to be kind of crazy today. So especially the weeklies, like if you have some longer term stuff, it might be okay. But man, if you have something expiring this Friday or next Friday, yeah, it's going to definitely take a hit. And looking at Ford, Mike, like, man, this stock has been running up and they might start to consolidate here after the bad past few days.
Not going to lie, Ford looks decent compared to like Rivian right now. Poor Rivian is just getting, it looks terrible. It's down 5% already. The market's been open for 20 minutes, and it looks like Rivian just made a brand new low. So,
yeah, they did. That is not good to see. And Ford actually owns what, 15% of Rivian, so that's not good for them either, I guess. Yeah. I'm looking at both of them, but man, yeah, it's not good to see with Rivian. Kind of like we expected, Mike. These I will say that earnings report was pretty bad. Like you don't come in with negative 12 EPS for nothing. I mean, that's pretty bad in the negative there. And then they had those bad production numbers and everything like that. I know that they might do better this year, but still, that's pretty bad to see. And hopefully that implied volatility starts shooting up. I know that it's still pretty high at 84%, but we can see as the stock started dipping the past 2 days, the IV starting to go back up a little bit. And Mike, if it starts to go up a lot, it might be good to sell some puts on Rivian eventually. I'm not saying right now, but eventually I think this one's going to form a pretty good bottom. I don't know where it's going to be, but I think it'll be a good pickup at least over the next year.
For sure. Yeah, I mean, it's not my favorite setup, but if I could get it at the right price, and I would definitely consider it. Honestly, for me, I would need it to fall a lot before I invested into it, but maybe if it touches like 55 or something, then I'll hit it, but we'll see.
Yeah, that's kind of crazy, to be honest. Like, this company has some pretty big backers. Like, they have like Amazon are investing in them, Ford's investing in them. They have like lots of pre-orders on the trucks. Like, I don't know. I feel like that they'll do a little bit better over the next year, but who knows though? They might be at 55 or possibly even less, Mike. Like, with the way they're valued right now, like they're going to have some crazy numbers come out this year to back themselves up, or else I could see them going down to 55.
So let's see something really quickly. I remember when Rivian first hit its IPO, like I was kind of hating on them because of their valuation, but I just want to check that valuation one more time. So let's see. So
it's still pretty high.
So it's still pretty high, but get this. It's actually worth less than Ford and GM now. So Rivian was the top 3 auto manufacturer by market cap, and I think at the time their market cap, like when they were really running up, I want to say it was like $150 billion or something crazy like that. So I'm just going to read off the list right now. So coming in at number 1, we have Tesla with a $1 trillion market cap. Number 2, Toyota with a $317 billion market cap. Number 3 used to be Rivian, right? Like around $150 billion or something like that. But now we have Ford with a $93 billion market cap. And then we have GM with a $90 billion market cap. And now we have Rivian in number 5 with an $80 billion market cap.
Yeah, that's pretty crazy to see him down that low now. What was GM's again?
So GM was 90 billion, Ford was 93, and then Rivian's 80.
Wow, yeah, that's pretty crazy to see him down that much again. And as they keep going down over the next few days, it's going to get less and less too. And Wow, that's pretty crazy to see that they're already down below those companies. Like I remember, I didn't think they'd fall back below them to be honest, but I guess it makes sense to me personally. Ford has been having some really good news, Mike, along with GM unveiling. I think GM unveiled their electric Silverado this week, so that's pretty good news for them. And Rivian's definitely going to have they have a lot of I should say adversity to work against before they start to go back. And I don't know, Mike. Like, as they start to go down, like I love them to form a nice bottom. I'm just really waiting for some nice chart setups, to be honest. Like these chart setups are just looking abysmal, to be honest. Like whenever they fell on earnings, they broke those major supports, and it was almost looking like a dead cat bounce, and it looks like it ended up playing out like that. And I don't know how low they're going to go, Mike, but I don't know if that implied volatility gets high enough. Maybe we'll be able to sell some 50 strike calls eventually, or 50 strike puts with how crazy some of these people get with going out of the money.
Yeah, that's true actually. So we'll see. And then how's Tesla looking? Because Rivian's taking a hit. The market's decent, but oh yeah, it looks like Tesla's actually breaking their low of day right now.
Yeah, this one's not looking good either. And Tesla has lows, or I should say, lower highs on the daily chart, not looking good. And like you said, intraday, it's starting to really break below that major support. Definitely not a good move by them. And it's not looking good. I hate to say that today so many times, but we're just having so many stocks either flat or in the red. It's insane. Like we have Tesla in the red. We have Lucid Motors in the red. Enphase is in the red again. Enphase had like a 12% drop yesterday. Like, man, this poor stock is getting hit so hard. I don't know what's going on with some of these major companies. Like, it's just, we always see the market have these ebbs and flows, and I guess it's just part of trading. But it's going to create some good opportunities, and I'm really hoping to see a good transition, like out of some of these major stocks and into the growth stocks. But so far we're not seeing it in a major way.
True. So it's just kind of like that double whammy right now because we have that combination of rates rising, which obviously hurts a lot of companies, but it looks like that was already priced in months ago. But then on top of that, now we have like I guess you could say like the nail in the coffin with just the short sellers, having a great time, and then people unfortunately selling out of their positions. Like it's just like the stock market like kind of repeats itself all the time. Like it's people like to buy when everything's going great, and they sell when things are looking bad. So either way, though, kind of like you mentioned, it will present an amazing opportunity for the people who do end up buying the dip. And I know like some of the best opportunities come when the market's looking the worst. Like if we look back throughout history, especially on the S&P 500, or even if you looked at Apple or anything, the best opportunities were when things were not looking good. I know so many people, including myself, just, wish they went all in on like Tesla or the S&P 500, in March of 2020. But it looks like we're setting up for a pretty good opportunity with a lot of growth companies.
Yeah, we are. It's going to be a really good, I think, next few years, especially for anybody who's grabbing shares and holding them for the long term. Like Mike said, though, a lot of people are starting to sell out. And if you guys are in these companies and, if you have confidence in them, it's a good thing to just hold. Like I know people always say, I'm going to sell now and I'm going to buy back in lower, but then sometimes you end up not buying back in, or you miss the boat a little bit and you end up getting an even worse price or what have you. But, like Mike said, it's a crazy game. The market goes up, the market goes down, and you almost just have to realize that. And if you're buying shares, like let's just say DraftKings, for example, and, I'm in this situation, DraftKings has been going down. I've been averaging in, and, as it goes down, like I'm not going to get scared and just sell out of my shares right here because I see DraftKings, falling below support. Like, you have to almost have like that mental with that mental game that will allow you to hold these stocks for the longer term. And like even though they're going down for these few months, like look at DraftKings here. Like they fell from 65 straight down to 35 and then went straight back up to 75 over the next few months. Like, could you imagine how many people were selling out on this dip and then they missed the rise back up? Like, I'm sure a lot did.
Oh, that's how it goes, Tom. You know that. Like it's just like the basic stock market fear and greed cycle, I guess you can say. But
Yeah.
As we're speaking, it looks like the S&P 500 is making a new low of day right now. We're getting really close to that $466 support. The SPY is definitely selling off right now. IV is on the rise, and it looks like tech stocks are definitely taking a hit. And even Dow stocks are struggling today too. I know this morning I woke up and I checked CNBC, and like I want to say Nasdaq futures were down, I don't know, maybe like 0.2%, maybe 0.3%, something like that. And then the Dow futures were actually up, but it looks like the Dow stocks actually fell right over.
Yeah, they really did. DIA is looking a lot worse than I expected to see, actually, because normally these, the Dow moves a little bit slower, but wow, that's pretty crazy to see them turning over that bad. I wonder how some of these major stocks like KO and PEP and all these stocks are doing. And it looks like some of the value stocks are holding up pretty well. So must be some of these bigger stocks in the Dow making them fall. But yeah, this is definitely not good to see with the Dow. I can't believe the Dow is falling harder than the QQQ. Like I would have never thought that personally, especially seeing all these tech stocks down. I'd really think the QQQ would be lower.
Yeah, exactly. All right, so we have Raymond saying NIO going down. So let's take a look. NIO, yeah, it's definitely struggling. It's just really just fell through that support right around $29.50, and we're trading lower by the minute.
Yeah, we are. And that move last week with NIO was amazing, Mike. Remember, they had that great like 14% up day or 10% or something crazy. But, they had that crazy move from like $28 all the way up to 33. That was amazing. And they were holding up pretty well this week until the past couple of days. It's just these sell-offs just unfortunately trickled into NEO. And I hate to see them down like this. But again, though, they're a China play. And I know that they're not a normal China play given that they're in the EV sector, but it's not looking good on the daily for them. And I really hope that this support around 28 holds up, but it's not looking good.
Yeah. So I'm just doing another quick scan, and it looks like there's just a lot of selling pressure across the board, but we're even seeing companies like Affirm continue to trade lower, even after it's been trending lower for the past couple of weeks now. Like Affirm was at 176 a couple weeks ago. Now it's at 76, and trading lower. IV's on the rise. It's falling through supports, and now we're to the point where it looks like it's filling the gap that it had on on like August 28th. So
yeah, it really kind of is starting to fill that gap, Mike. And looking at this, it's getting really close to like that support. And I'm not saying it's going to hold up on this support in a major way, but I could see it possibly starting to slow down around here. And maybe like how we consolidated a lot around $60 for those couple months before that huge rise last year. I feel like that we might start to do something like that again around $60. And, if $60 holds up, I think Affirm might be a pretty good pickup for the long term. And Mike, that IV is starting to shoot up. Like puts might be a good way to go here pretty soon.
yeah.
I should say shorting puts.
Yeah, exactly. Shorting puts, because I've actually really been considering it, and I've been looking at the same thing for Upstart, and I haven't really made the move yet. But I'm kind of glad I didn't, because premiums are getting higher and higher, and the stock's getting lower and lower. So that should be a pretty good opportunity. They're both kind of filling gaps, as you pointed out. But yeah, I mean, like if we go back to Affirm really quickly, they had some amazing news lately, and IV starting to rise. It's over 100%, and the stock's at like 76 right now. So it's like, let's say I went out to February 18th. Oh, Tom, if I sold the 80 strike put, right? I know it's slightly in the money. If I sold the 80 strike put, I would get paid almost $1,300.
Oh my gosh, that is insane, Mike. $1,300 just to pick up 100 shares at 80?
And then I guess you could argue, well, okay, that's in the money, but let's say we went to the 75 strike put, which is $1 out of the money. I would still pick up around $1,000, that's crazy to think, Tom. Like literally, hey, someone's gonna pay me $1,000 to buy AFRM at $75 each.
Yeah, and on a $75 stock, that's like almost like 1/7 of your position, just about. Like maybe it's a little bit more, but still though, pretty much just about like 1/7 of like your total position. That's insane to hear. And wow, those premiums are insane. This is actually going to be one of the plays I'm eyeing up over the next few days, probably then.
Yeah, exactly. Because if you sold a 75 strike put, even if you got assigned, your cost basis is only at 65. So it's like it's kind of tempting, and especially with those premiums, it might be the move. We'll see.
Yeah, and
Um,
with how we're filling the gap, it might finally be the time for a nice support to finally form somewhere.
exactly. And I know what's kind of funny is like I know we say like AFRM, like all right, you can get paid $1,000 to go slightly out of the money. And one thing to keep in mind is yeah, it's a $76 stock, which is decently priced, but with IV moving the way it is, just on all of the stocks like in the market so far, there's going to be a lot of opportunities like that. Even though it might not be like get paid $1,000, you might get like paid like maybe $400 to buy 100 shares of like a maybe a $40 stock or something comparable like that. So the point is that there's a lot of opportunities for short puts right now, and it's kind of just weird, like just like verbally saying how much you will collect to buy the stock low. Like it's just like who would be buying these puts? But I understand like why it can make sense to buy some of the puts because they can print obviously, but it's crazy.
Yeah, it really is. And looking at it going forward, like you said, there's lots of opportunities in the market with this. AFRM is one of the better ones with the IV up this high. Like most of them don't have the IV setup that AFRM has. So this one's in a really good setup, in my opinion, for shorting these puts. And I love it, Mike. I think the setup's great. And as we fill this gap, I really see it starting to slow down eventually, somewhere around $60 at least. So hopefully we start to go back up pretty soon on it. And Mike, as we talked, my watch list just went from like every stock was like -4 to 5%. Now we have -6% stocks. AMC is getting destroyed, Mike. Oh, unfortunately, AMC is coming back down to retest that $20 support. And I'll be honest, if we break below $20, it's not going to be good for AMC. Like we ended up bouncing on it last time and ended up going right back up. And the way it's looking now is not good at all, in my opinion.
Yeah, and how's GameStop looking? Like especially on the daily, it looks like they're actually making a new low since a while.
Yeah, I'll say GameStop, in my opinion, has been holding up a little bit better than AMC has, but oh, you're right. I mean, it's also starting to really fall off, and it's not looking good. I'll be honest, we're like right on what's the major support here, like 119 or 120. Like if we fall below this, it's not going to be good. And I'll be honest, like with the way it's setting up right now, to me, it almost looks like a guaranteed play to the downside. I'm not playing puts or anything like that because this stock is insane, but to me, it looks like it's definitely going down.
Yeah, and then if we go like intraday on GameStop, it's also just taking a big hit. Like it almost, I don't even know how to describe it. It's not looking good. And what's kind of unsettling is like I know that it's been downtrending for the past couple weeks, but a lot of stocks have been, even my DraftKings has been, but it looks like the sell off is just kind of accelerating too. You know what I mean? Like intraday, it's just getting worse and worse, and more volumes coming in. And the concerning part is like when we see drops like this, especially for a play like GameStop and AMC, the lower it goes, the better the hedge funds are in. So it's like the lower it goes, the less chance of us actually seeing a squeeze.
Yeah, exactly. And Mike, look at this huge volume candle come in today. Like, to be honest, like as the market starts to go down and as GameStop starts to go down, I think people are going to start really getting scared of AMC. And like we're seeing, whenever we clicked on it 20 seconds ago, it was down 6%. Now we're down 8.3%. It's just continuing to go lower. And I feel like unfortunately, Mike, the retail traders, I think, are really starting to lose morale with GameStop and AMC. It's unfortunate to see, but I feel like that they're starting to get rid of their shares, and it's not going to be good. Like it's going to create a crazy sell-off. Of course, whenever AMC was going up, everybody was buying it. So it was flying up. We had those short sellers getting squeezed, also pushing it up. And right now, it's the exact opposite scenario to the downside. So just be really careful, guys. I will say, I know people love AMC, but at some point we got to switch to some other stocks here.
Yeah. I'm just like looking at the watch list right now. It's like, no, everything's falling, but not looking good. We have Mike saying, thought on buying shares if AMC drops to 19. Not for me. I feel like the biggest concern is opportunity cost. Like even if you bought shares of AMC when it hit 19, or if it hits 19, and maybe it pops up, and that could be awesome. But it's like I feel like with that same capital, you can put that into so many stocks right now. Like I know we always talk about DraftKings, but even if you looked at like a Firm or Robinhood, if you wanted to, or Zoom, or anything else for the most part, like there's so many good deals, and there's like a lot of great companies that are growing at like insane rates that have very low stock prices right now, where I feel like you could honestly get a better return with lower risk by buying up like a lot of other companies.
Yeah, I think so too. And the main thing for me that you mentioned there, Mike, was lower risk. Like with AMC, you might risk that AMC goes back down to $10, back down to $6 or $7 even. Like who knows how low this one could end up going. It's a movie theater business, and we all saw what happened to Blockbuster. So, it could end up, being pretty bad in the longer term. But yeah, I think it's too risky. Like Mike said, personally, I don't like it. My main reasoning, Mike, or I'm talking to Mike Chang, I should say, just so we don't get too confused here. But Mike, to answer your question, in my opinion on AMC, if it drops 19, I wouldn't do it because look at this. We have this huge support here around $20. Generally, whenever these big supports break, you see some pretty big moves below them. And if we break $20, like, to be honest, there's no huge major supports until like, maybe $15 and then $10 after that. So personally, if I see it fall to 19, that just, in my opinion, means it's worse. Like if we see it bounce on 20 and then start to go back up, I think it could be a pretty good support buy if you put a quick stop loss right there or something. But in the end, I like Mike said, I'd recommend getting something else.
Yeah. Oof. So it looks like Nvidia and AMD are also falling off the board right now. AMD down almost 3% and Nvidia down 1.5%. They're trading lower as we speak. A lot of other chip stocks are falling with it. TSM's taking a hit. Actually MU's holding up very well. I will say that. But yeah, a lot of stocks are just tanking today. Even good old Boeing, Tom, is completely reversing. Like that stock was looking awesome earlier in the week, and it tried to run up this morning for a second, but it just got rejected hard. And it's kind of unfortunate because like we're not even really seeing like the value stocks pop up today. Like, okay, yes, there's a couple stocks up here and there. Like, okay, JP Morgan is up 0.6%, but if you look at that chart, it's like barely up 0.6%. Like intraday, it tried to run up for a second and it's just been falling ever since. So it's like even the stocks that are supposed to be up in a market where rates are rising aren't even really holding up. So it's just like even those are selling off.
Yeah, they are. And you can see like JP Morgan and Bank of America, they're both getting up to some pretty major resistance levels here. Like Bank of America is like almost double topping it. I don't know if this is the all-time high, but at least the highs over the past couple of years. They're definitely seeing some big resistance right there. JP Morgan's hitting their resistance right around 170. And yeah, it's not looking good for them. They're just not really moving too much. And even like the safer like value stocks are just once again being slow, like KO's up 0.3%, unfortunately. And I know you even mentioned MU holding up today, Mike. And I'll be honest, even MU's setup is like, even though it's holding up, it's not looking too good. Like it looks like just like JP Morgan and some of the others, it's kind of like double topping here around this all-time high. And they got this big resistance around $100. And, they've been flying up too. Like if we see AMD and NVIDIA keep selling off, like MU will probably start to come down. I wouldn't even be surprised if JP Morgan and the bank started coming down a little bit.
Yeah. All right, so we have Johnny Leverage saying, how would you suggest to hedge my shares using covered calls? I cannot go out of the money anymore since stocks are tanking. How far in the money and duration? So covered calls can be a way to hedge, but they're not the best way to hedge. And it really depends on like this like one main factor, Johnny, and that's, are you willing to lose your shares if the stock rises? So for example, like let's just say randomly you own AI, right? Let's say you own shares of AI and you're selling covered calls on them. if this is a longer position and you're looking to hedge yourself and you want to hold this stock for like 2 years or 3 years or whatever, you do not really want to sell in the money covered calls on it, because let's say the stock pops up for the rest of the week or maybe early next week or whatever, you're going to have to give your shares away at a relatively low price. So if you want to hold your shares, you probably will not want to sell in the money covered calls. If you're fine with losing your shares, you can probably go like a couple strikes in the money with maybe like 30 days left of time. That's normally a nice sweet spot to hit. 30 days is like enough time where you can get a decent premium, and also the theta decay is pretty rapid. If you want to go shorter than that, that's fine too. Like maybe anywhere from like 1 to maybe like 2 or 1 to 2.5 weeks is also normally pretty good. And then in terms of in the money, like if you're bearish on the market and you think it's going to keep falling, obviously go deeper in the money. There's not really like a formula or anything we can use to, find the perfect like ideal strike and expiration. But like if you want like a couple strikes in the money, that should be fine. But it really depends on if you're willing to lose the stock or not, and how bearish you are on the stock. And then Johnny also just said, at this time I'm just trying to cover my margin call, LOL, deep red. So my thing is like, is a covered call gonna cover the margin call? So I don't know. Another option you can take if you wanted to, and this is pretty risky, and honestly it's probably not a smart idea, but like let's say you have a lot of shares and the stock is just so low, but you're really bullish on the company. What you can do is you can close your shares and you can go as far out as possible in terms of expiration, and you can go as deep in the money as possible and buy the call. The downside is that you're buying calls and you don't own equity in the company, but the plus side is that you will leverage your money. So if the stock does pop, you'd make a lot more. And then another thing is that you would cut your margin requirement probably by 50%. So keep in mind there's definitely problems with doing that, because if the stock continues to fall, it can be absolutely horrible, and then you have theta working against you as well. But I just don't know if covered calls are going to cover a margin call.
Yeah, I don't know either, and it all depends on how much your margin call is and on how much you're losing on the stocks, and it depends on what type of stock you're doing it on too. Like if you're doing it on a stock like AI here, it might be a little bit different than a stock like Zoom or something like that.
Right.
The implied volatilities are always different, and the pricing is always off, and lots of stuff like that. But I think Mike explained it pretty good though, in the grand scheme of things. And to be honest, Johnny, like I think that if you just held the shares, I think that's honestly the smarter way to go. I don't know how close you are to getting margin called or anything, and that is a little bit unfortunate. Unfortunately, all these stocks keep flying down, like DraftKings and stuff. It's just it's obviously not good. But if you are getting margin called, maybe you could just, if you have a ton of shares, maybe just trim your position maybe, or something like that. And like Mike said, you could always get some calls in the end.
You can also implement a repair strategy. Like I made a couple videos over like the past 2 months on some very unique option strategies that just like cover like unique situations. So like there's this one, it's called a repair strategy. So it's like if you have X amount of shares, you can you can sell a covered call, and then you can also buy a call debit spread. So if the stock pops up, like it dramatically lowers your break even. But I don't know if that would be perfect for your situation, because the biggest risk is if the stocks continue lower and if they continue selling off in the crazy way that they are now. So yeah, I mean, it's definitely tricky. Then we have Sean saying, thoughts on PGR or all for an inflation hedge. So PGR is looking pretty good. All is too. I know insurance companies normally do pretty well in times when rates are rising. So, and even inflation as well. So I like it. They pay a decent dividend too. Pretty solid company. It's hard to go wrong with them. Their IV's pretty low.
Hey, this is my insurance company for my car, so hey, it's pretty good. But either way, they're flying up, and Progressive and these insurance companies are generally pretty good for the longer term. generally like insurance is a pretty safe thing to get into. So like looking at it, I like Progressive. It is around this all-time high. It might double top here, but to be honest, like they've been going crazy. And Mike, have they been coming out with like some special dividends or something? Like I'm seeing some like a $1.50 dividend here, and then another 10-cent one coming out like just a couple weeks later. Like that's pretty crazy. It must have been something special.
Yeah, that is pretty interesting, actually. I haven't been up to date with this one. Like, obviously, I follow other stocks more, but it does look like they paid a special dividend. I'm just trying to see if there was any specific news on it really quickly. So, 12/17. Yeah, it looks like there's a special dividend. I'll definitely look into it more, though. But long story short, insurance companies are normally pretty good bets, even with inflation rising and like rates rising. So that's a good industry to be in. Then we have Ironical saying, seems buyers are coming. Hopefully, please. I mean, it's been a rough day, and the market's only been open for 50 minutes, Tom.
Yeah, it has, and we just fell below that major support, and then we got the buyers coming right back. I don't know. To me, Mike, it still doesn't look too promising, but I'm praying for a nice recovery here, especially out of our poor old DraftKings.
Yep. All right, so I just want to welcome everyone to the stream really quickly. Thank you guys so much for joining, even on a day when the market just keeps on tanking. But welcome Mike, Hunter, Kathy, George, Sam, Vicky, Keisha, Jesse, Raymond, Matt. We got Mike in there, Johnny, Sean. Who else? Ironical. Thank you guys so much for joining. We really appreciate all of you. It looks like the market's trying to pop back up, but who knows, Tom?
Yeah, nobody knows at this point. It looks like the QQQ and the SPY are pretty much moving together. We have the DIA, unfortunately, like we talked about earlier, pretty low. Like I know it's kind of bouncing on this 362 support, but we're seeing the SPY and the QQQ come back with some pretty good green candles here, and the DIA is still lagging behind a little bit. Hopefully they all start to come up though, and man, it's just it's not looking good still. Like some of my favorite stocks this week, Mike, were Disney actually. Like yesterday, I remember Disney had a great opening, and with the SPY tanking off in the middle of the day, it just ended up dragging them down, and hopefully they end up bouncing on this 154 intraday support. But once again, I mean, they're not looking too hot either.
Exactly. I mean, honestly, Facebook is holding up pretty well. Like everything else is tanking, but Facebook is breaking out right now.
Yeah, it is. I was actually just looking at it. It's kind of crazy to see that they're moving like this, and there's a huge resistance that they're actually touching like right now at 332. We've had tons of intraday bounces at this 332 level over the past few days, and I'd love to see us get a nice breakout up above that, maybe up towards like this 336 resistance. That would make for an amazing move out of Facebook. But man, you're right. I mean, out of all the stocks, this one's moving very well. Kind of reminds me of BABA, except BABA pulled back.
True that. All right, well, Tom, do you have any last-minute plays or anything you're seeing?
Man, I was looking at those oil stocks, and I was kind of hoping they would go up today, especially with everything else going down. But, I've been honestly waiting for these stocks to go down, and as we see, oil on the chart has been going up a little bit, so it's going to be kind of crazy. Just wanted to throw this one out there because, we've been waiting for it to go down a lot, and it's starting to go up in quite a big way. So if anyone's like short or anything like that, you might want to reevaluate or something like that. But looking at the oil plays, they're kind of crazy. The main things moving today, like we said, Mike, are Facebook. There's a couple others, like some of the safer ones like McDonald's and KO are in the green, of course, but they're just really slow movers, and they won't really be good plays for options. But, honestly, just watch Facebook. And personally, I'm going to be looking at plays to the downside. Like I know Facebook is up, but honestly, I'm going to be like watching like Enphase, Neo, Moderna, stocks like that are tanking today, and maybe just look at like quicker day trades here because, it's not looking good for anything to the upside.
Exactly. All right, well, thank you guys so much for joining today. The market is going crazy. Stocks are tanking. It sucks short term, but it should be an amazing opportunity for the long term, whether you're buying up, really any company. I mean, basically everything's falling right now, so whatever stocks you like are probably trading at a good level. So, it sucks for the short term, but it should be pretty awesome for the coming months and especially the coming years. So thank you guys so much for joining, and have an amazing rest of your day.